Hi, thanks for tuning in. This is a weekend review for the week ending June 16th, 2023. We're looking at a weekly chart of the S&P 500. This is a technical breakout. You've got 3 weeks now in a row of closing above the top of the Bollinger Band. You have PPO and histogram rising, and you have ADX above 30, which is telling you we are in trend mode. The implication of this technical analysis is that dips into the yellow and orange lines on the weekly charts have a high probability of catching a bid, finding demand. Zooming into the daily chart, we are a bit extended. ADX is at 60. When this happens, when she gets up here, she tends to end the trend intensity and then perform some form of mean reversion. Taking a look at this chart, this is a breakout. The trend is up, okay? We don't have any signs of a reversal. This is, you can see EMA 5, SMA 10, the yellow and orange lines are in trend mode, ADX above 30, PPO histogram rising. This is what a trend looks like. Back here, when ADX was stuck below 25, stuck below 30 for, I don't know, 5-6 months, you were in a trendless market. Those conditions have changed. This is a technical breakout. That being said, let's take a look at some of the leaders here. QQQ being the obvious one, and SMH 1 and 2 combo here. So you're looking at QQQ, another close above the top of the weekly Bollinger Band. This breakout continues. This breakout was signaled here at 345 and is now at 367 on a closing basis. John Bollinger, the man who invented the Bollinger Bands, replied to my tweet when I called out this breakout. He was in disbelief. He did not believe that it would continue, even though he himself wrote the rules for this breakout strategy that I'm using. This breakout strategy is in the CMT textbooks. You can read it. I highly recommend. I believe it's in level 1. Either way, he replied on Twitter. It made me very excited. Since then, price has gone sideways to up. We continue to see the exact same conditions that I've just mentioned that we saw on SPY. ADX above 30, histogram rising, PPO rising. This is a breakout. This is a trend. The implication, pullbacks into the yellow and orange lines are for buying. Looking at the daily chart, we are approaching some of these gap fills. The weekly chart has this one up here at 380. You can see the close back here from January 10th was at 380 and a penny, and the open the very next week was at 374, the high 376. So we never filled this gap at 380.01. That's where she's headed. And ultimately probably all-time highs, just given the configuration of this trend. This angle of attack is way stronger than anything you saw coming off of the 2020 lows. Just pointing that out. This is a technical review. This is not a macro review. I'm not looking at the conditions from a macroeconomic standpoint and comparing them to 2020. I know these are very different conditions. However, technically speaking, this is a very, very strong angle of attack and can continue for quite some time. Again, looking for pullbacks on the daily chart into the rising 20, into the 50 to be bought. Looking for this to continue for probably the rest of the summer. Not in a straight line, but it can. That's how these breakouts work. They tend to leave everyone at the station. Take a look here at SMH. You're going to see the same thing. Okay, we got the same breakout signal back here on May 22nd, and she's higher, holding the top of the band. Look at the bands expanding. The top band is curling up. The slope of all of these moving averages is exactly what you want to see. This is a uptrend. I pointed out to everyone for many, many months, this is a uptrend, and pullbacks into a rising 50 is mean reversion. This is how the market works. It trends, it reverts to mean, and then it trends again. And that's the way it's always worked. You have a buy signal on SMH Okay, it just triggered. You have a buy signal on the monthly for QQQ. You have a buy signal on SPY. Okay, and you can see the dominant trend of all of these on the monthly time frames. Everyone on Twitter is looking at a daily and an hourly chart, screaming overbought, ignoring the monthly signals that I am showing you right here. Okay, this is an uptrend. This is mean reversion. We are now resuming the trend. What is the implication? A challenge of the all-time high, if not setting a new one. That being said, sentiment will shift to bullish. Okay, and I want to point out some of that right here. If we take a look at some of the AAII studies that came out, you can see we are now shifting sentiment from bear to bull. This is what's happening right now. And it's happening because price is going higher. Nothing changes sentiment like price, and nothing changes price like sentiment. You had a bear market or a pullback to mean, whatever language you'd like to use. I'm not here to fight or debate it. During that pullback, October lows, you had some of the worst sentiment in 60 years. Some of the most bearish sentiment I've ever experienced in my life. And as a result, they stole everyone's shares and they're headed higher. That's the bull story. I mean, it is objectively true that we have monthly buy signals on all of these charts. What is not true, right? What we don't have is a uptrend in IWM or the small caps. What you have from IWM is a stock that has gone 7% in 5 years. And just to give you some context, SPY is up probably 50% in those same 5 years. QQQ is up in that same 5 years 100%. And IWM hasn't moved. This thing is broken. It's called a non-confirmation. This is Dow theory tenets. I think it's number 4. But the basic concept is, if the transports are not confirming the move higher in the S&P, then you need to be suspect. The idea is we're all humans. Behavioral economics looks at the study of humans. We should be greedy across the board. We shouldn't be selectively greedy. Okay, and at times of fear, we should be fearful across the board like we were in October. Everything went down. Now, since then, we've only seen tech go up. And I know we could look at New York Stock Exchange advanced decline lines and we might see a little bit of improvement in breadth. Fine. But this breadth will not improve until this pattern breaks. And this is a descending triangle. And as you can see by the Bollinger Bands, they look nothing like the other charts. This is a breakout. The Bollinger Bands on IWM are contracting. The histogram is contracting. Momentum is stuck at 0. ADX is stuck at a trough, has basically gone nowhere. Okay? And if you look at what's really happened, IWM has been in a bear market since February of 2021. This is a 2.5-year bear market for IWM. And this pattern just completed. Here's your A. Here's your B. A big C. A more narrow D. And now we've got our E that just finished. And you guessed it, where? Right at the downtrend. Okay? Now, these patterns can break either way. It can break bull, it can break bear. I've posted this on Twitter many times. I've showed all of this documentation from the CMT studies that support this. Elliott Wave supports this theory. Triangles can break either way. Just because it's a descending triangle does not mean you need to be bearish. So, there's 2 ways you can look at this. It is a potential rotation candidate when it breaks above 190, 200, this general top that you see here. That will trigger a breakout, that will trigger rotation, and that will generally happen as QQQ and SMH and SPY are all topping out. The other way you can look at this is IWM is not confirming higher prices, and as a result, there will be a flight to safety. Okay? And so what I'm going to do is just try to show you the evidence that supports right now rotation. Okay? I don't believe one thing or another, right? There's no bias here. I'm going to show you the data. Okay? And you can come to your own conclusion. So what we're going to do is take a look here at SPY versus TLT. We're going to look at SPY versus gold. We're going to look at SPY versus the dollar, SPY versus commodities. And what do we see in every one of these? SPY versus TLT, still favoring equities. This is a trend that's been going on since 2020, the March lows. So if you've been in bonds since then, that's just dumb. I don't know what else to say. I don't care what your leading indicators are saying. I don't care what your emotion is. It is objectively true that equities are outperforming bonds. It is objectively true that we don't have a trend in this relationship. SPY versus gold has been range bound since basically summer of 2022. Okay? And what I see here is almost another descending triangle. Your A, your B, your C, your D, and we're going to pull back one more time and put in that E wave. Now, I don't know. Maybe that's what happens. Maybe not. Maybe this is just some big zigzag and we're going to go back all the way up to challenge the 275 all-time high. The point is, price got back above the 50. Price held the 200 on the weekly. This is starting to look like you should be owning equities over gold. But if you were to say, John, why would we want to buy gold or why would we want to buy SPY? You could buy both. And I'd say that's fine. Okay? I don't have a definitive answer for you on this pair. When we look at SPY versus the dollar, it's very, very clear. This is a inverse bottoming pattern. This is a breakout. And money is leaving the sidelines, it's leaving the money markets, and it's heading into equities. And this is very, very obvious. You had a downtrend, you had a sell signal that was triggered in February of 2022, telling you to get out of equities, to start looking at the dollar as a place, a store of value. October lows, this pair reverted and instantly captured the 200 again in November of 2022. This was the start of your macro signal to get back into equities. And certainly by March of this year, you should have been allocated out of cash and back into equities. As we look at commodities, okay, we had the commodity market topped with oil. Okay. And you can go look at oil. I'm not going to cover it. But you can see this basket of commodities, DBC, topped here June 2022 and has favored owning equities over commodities ever since. Now that we know equities is the place to be, maybe it's gold, okay? But you should also have equities because all the other defensive classes are telling you that we are risk on, right? They're not favoring the defensive plays. They're favoring the offensive plays. Let's dig into what is performing well within the equity market. There are 11 sectors. I could go through each sector, but I like to just look at IWM. I look to QQQ and SMH. And those three have been enough with SPY. Those four have been enough for me to make a lot of money in markets. When I look at this pair right here, SPY has outperformed IWM going back to the IWM top in February of 2021. Okay, QQQ has outperformed SPY for the entire year. That was not true in 2022. Okay, QQQ underperformed SPY, but since the start of 2023, tech has been the place to be. And if you look at SMH versus QQQ, SMH since the bottom is leading QQQ higher. Okay, so what can we conclude from the macro intermarket analysis that I just conducted with all of you? We can conclude that equities is the place to be and QQQ and SMH is the place to be. And if you'd like to get defensive, you should get defensive in the form of gold. That's what I'm seeing. That's what the analysis is telling me. Now let's go back and look, and you can see IWM, yeah, maybe it's a rotation candidate, and maybe she gets some love in the upcoming weeks. But right now, she is stuck. But what I will say is these moving averages are very, 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 very tight and narrow. And every time this happens, just like it did back here, right, it's the start of a big move. I don't know what direction. I've made that very clear. I'm not going to guess. I'm not interested. You want to take a look at IYT, the other leader, and this one's closing above the top of the bands. Okay, this one's going for the breakout. But what I will say is, this is going back to May 2021. This is a 2-year bear market of lower highs and lower lows. Here's the high. Here's a low. Here's a lower high, lower low, lower high, lower low, lower high, higher low. Okay, it's possible that this pattern is breaking right now and that the rotation will continue out of tech and into the names like that you find in IYT and IWM. Okay, and if you look at the monthly chart here, you are starting to get that capture the 20 look that IWM does not have. Okay, the slope of the 20, this thing has been providing supply since the top. And really, this thing has done nothing in 5 years. Okay, has gone nowhere in 5 years. That will frustrate everyone. And if you look at the IWM QQQ pair, this is a 20-year trend. Don't feel like you need to jump on the IWM train just because it's due. When the ratio favors IWM over QQQ, it will become very obvious, and that trend will go on for a while. It will not just be a 1 week, 1 month thing. So you don't need to be the first person at the party. Okay, now that we know it's equities, which equities should we look at? Well, NVIDIA is a top holding in QQQ and SMH. Go figure, she's already hit all-time highs. Is there anything wrong with this chart? No. Is this a trend that everyone can participate in? Yes. Is this a breakout? Yes. Is this breakout on volume? Yes. Is the histogram, PPO, and ADX confirming trend? Yes. What are the implications? That dips into the yellow and orange line, get bought. Is any of this making sense? I've been saying the same thing for weeks and months. I hope it's starting to resonate. When you look at these names that I'm showing you right now, look at what they've done. Okay? Momentum precedes price. We don't have momentum even waning yet on NVIDIA. We don't. This is a stone cold breakout. What does that mean? It means buy the dip. What's the target? This red line. 6, 7, 800. I don't know. It doesn't matter. It's going to go way higher than anyone thinks. Why was NVIDIA green this week on quadruple witching? Because all of retail still thinks it should top and bought puts. That's the only reason the dealers are hedging with calls and buying equity. Okay? It's now a breakout trade. Now you've got the breakout and momentum crowd all over this. All right? It's going to run its course. It will top at some point. I don't know when. You won't get me trying to guess. I'll tell you when it happens. Just like back here. We knew exactly it was happening. We had a momentum divergence high, but more importantly, we lost the 20 and we lost the 50. That's a big deal. We haven't even visited the 20 since the breakout. This is how early you are in the cycle. Okay? I mean, you got the buy signal back here. Right here at 200. She's doubled. No one wanted her. Look at some other rotation candidates. Tesla, close right at the high on month, closing near high on week. Now, I participated in this breakout. A break above 200 was a breakout for me. I bought, and I just sold at this gap fill. I'm going on vacation. I need to reduce risk. That's what I'm doing. You don't have to do what I do. I'm explaining to you what I'm doing because it helps people learn. The reality is the rotation candidates are within QQQ, right? SM Super Micro. I mean, look at this stock. Look at the monthly chart. It's gone. It's parabolic. Okay? 60 to 230. This thing is run its course. You missed it. Now, does this have a trend on the monthly chart? Yeah. Does that mean dips that pull back into 100, 180 will get bought? Yeah. But she's at 250, 270. Demand is somewhere down here at 100. You can't be chasing SMCI up here. Okay, you look around, you throw the ball around the horn. Look at CrowdStrike. A great tech name, a great company. These are the rotation candidates. Look at PLTR. This is where the rotation is happening. Right? XLE is dead. I told you this was dead. Energy has been dead. The trade is over. It ended back here when oil topped. Okay, XLF might start to wake up, but looks a hell of a lot like IWM, and that's because XLF is 10%. IWM is 10% XLF. So when you look at this stuff, man, you got to just try to stop guessing and just participate where the market is telling you to participate. Okay? I mean, look at Airbnb, another QQQ rotation candidate. These things don't want to quit. Right? You got the sell signal somewhere back here, depending on what you're looking at and what your time frame is. And we just got the weekly buy signal right here to get back, hop back in, close it high on the week. So I'm just trying to point out the names that are moving. And when you look around at things that are in IWM, like Crocs, these things are not performing well. The momentum is down. We've already visited the 200, found sellers at the 50, and now pulling back to the 200. Why is she coming back to the 200? She was just there. There's no reason to be here. And the only reason that she would pull back to the 200 is if the destination is somewhere down here at $80. And that's what I think, subjectively speaking, is in queue for IWM. I see nothing until this thing is way, 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 way lower, or breaks above this 10-month range here and that $200 level. So I'm not seeing the rotation into IWM, not at all. Now, if we throw the ball around the horn at ARC, I do see rotation. We don't have the monthly buy signal in ARC, but the histogram has rounded off. PPO is curling up. ADX is pointing down. So there's no trend. Look at the range. It's stuck in a range. You're missing nothing, right? You've missed nothing in ARC. If she's going to break out and she's going to move, it's coming. It hadn't happened yet. And if you look at the weekly, she gave you the weekly buy signal back here. And then look how many times she hit this 50. Boom, capture the 50, hasn't looked back. Look at that volume shelf acting as a launch pad. Okay, ARC is a rotation candidate. And if you look at what's inside ARC, it's Tesla, it's Shop. Look at Shopify. This thing is trending. ADX is at 43. PPO's up here at 11. The histogram's positive. What does that mean? Dips into the yellow and orange line have a high probability of finding demand. Go look at what I'm saying. Back test what I'm telling you. I know it works. I'm giving you everything. It's not a secret. Momentum and mean reversion trading strategies have been used for hundreds of years. I'm a little bit long in the tooth here with this video. I just wanted to wrap it up because I missed the last few weeks. I've been sick. I'm now heading out of the country. I'll be gone for the next 2 weeks. You won't get another video from me until after July 4th. When I return, I will be right back in it and will provide all the free content for you guys. But right now, this is all you're going to get. So looking at Bitcoin, we'll wrap it up with Bitcoin, gold, and bonds. But I'm not seeing risk on over here in Bitcoin. This is a sell signal. I got the sell signal back up here at 28K. Okay. Pulling back ever since. And what is this? This is a range. What's ADX telling me? It's telling me that she's stuck and that we should not be participating until what? Until she breaks the range or gets to the bottom of the range again, which is 17,000, which is what I think is coming, which gives you that left shoulder, right shoulder look. Again, zoom in. Maybe she catches a bid here, right at the 200. I've got an alert set. We'll see. It's possible. But with the weekly momentum pointing down the way it is, and the monthly momentum still not telling me to buy, we don't have a buy signal on the monthly. That means you need to respect the risk when the weekly momentum flips down. Names like Crocs, for example, are long on the monthly and down on the weekly. That's a buying opportunity. Do you see the difference? So that's just what I'm trying to point out to everyone here. You look at gold pulled back to the weekly 20, but look at this momentum. What is the momentum telling me? What's ADX telling me? It's telling me that the probability that this 20 holds is low. This isn't the dip into the 20 you want. Back here, when histogram was positive, PPO was positive, when you pulled back into the 20 and the 50, that had the high probability setup of catching a bid. You don't have that here. Gold is not a buy. But on the monthly, it is. Okay? This is why gold is the most interesting setup outside of equities right now. This could go either way. I don't want to guess. I want to see a clean breakout. Get above 186, get above 194, stay there, and you got yourself a clean breakout with profit targets way higher. But we don't have that yet. We'll take a look at TLT. This is a downtrend. Please avoid bonds. Just don't participate. Hallmark of a bear market. PPO rallies back up to zero, then histogram and both PPO flip bear again. It's just, there's nothing here. Okay? There's nothing there. And you look at the dollar. This is certainly a downtrend since the top in October, September timeframe. What I want to point out, when did equities bottom? They bottomed when the dollar topped. Maybe it's a coincidence. I don't know. Just keep an eye on the dollar. It's always something you should be focused on. You look at the monthly of UUP. We do have that sell signal. We do have the histogram flipping down. Okay? What does that mean? It means the 20 is unlikely to hold. What's happened? Pulled back into the 20 and now has a fight. We'll see how she lands. That's all I got. This video is almost 30 minutes. I hope you like the content. If you do, like it, share the video, subscribe to the channel, and we'll see you in a couple weeks.